have any other question? Right, first of all, I'm recording now. This is recording. After today's section, I'm going to also upload this on YouTube and the other handles because I've been away for a while now. So I want this to be like an official welcome back video for the public. Please, everyone, I'm going to mute the microphones now so that everybody can hear me. All right, so welcome to today's section. Today's topic officially is reasons why your supply and demand zones don't work. Okay, we're going to be looking into multiple reasons why your supply and demand zones are not holding. All right, but then this is a video recording of me and the guys in the private community, and we are discussing about problems we could have in the market so that I can address that before going to the official topic for today. And then for those of you who are just coming, he stated out that his major problem is that he ends up picking a POI and an inducement instead of getting a mitigation. Instead of getting a mitigation from here, he ends up getting this. Am I correct? I don't know who has the question, but can you confirm if this is correct?
Yes, it's correct.
Okay, so we're going to fix this. We're going to talk about reasons why this is happening and what is probably doing wrong, and then move on to the next question. So basically, there are two things which could be wrong here. Number one, you don't understand structure, right? Either you don't understand or you understand and you're neglecting the structures, or you're misunderstanding them and picking the wrong ones. Or two, you don't understand the direction of the trend within the multiple time frames. Now, the two problems here are the time frames and the structure, not even the inducement. The inducement doesn't even play a role because you're picking an inducement quite all right, but the time of this inducement being used is what you don't understand. Now, one thing you should understand is the market is created in this form. All right, I've said this multiple times. Market is created in this form. And then one thing we understand is that once this form is broken, once this circle is broken, let's say this was an evolution stage, this was, life moving peacefully, and then all of a sudden something happens. There's a change in climate or, the weather or something, and then which caused the different effect. The effect of this resulted to this. All right. Now, before this effect is going to take place, it's going to eliminate every high that has been created by the previous one. All right, it's going to see this high as its own target. Okay, because it believes that there are liquidity resting above each and every high. Because these are also understood to be key zones. These are key zones, okay? And I've taught you guys what key zones are, or key levels, whichever you prefer calling them. These are key levels, all right? These key levels have liquidity resting above and below them because these are swing highs. We can call them key levels, swing highs, swing low, whichever you want to call them. But then understand that key levels are different from swing highs. So these have their own criteria, but majorly 90% of the time, these key levels are they appear to be swing highs within the structure and swing lows. Okay, now once you've picked out these highs, you understand that the new structure which is formed against this. So each and every previous high that has been created by this becomes liquidity target. You have this, you will see price returning into premium or discount of that newly formed range. Then the next intention would be to clear out this inducement. Clear out this inducement, they come down to form a new structure, which is within the discount of this formed range, right? And then they head back out to clear out liquidity, which is still an inducement because An inducement in trading is understood to be a reason why price wants to go in that direction. Again, an inducement is a reason for price to go in that direction. So don't misunderstand this, please. An inducement is a reason for price to go in that direction. And what is liquidity? Liquidity is basically a target. Okay, once this is a target, that is liquidity. Liquidity in business basically means your equity, right? The money which you have or the assets which you have, that could be your liquidity. Once you're liquidated, it means you don't have any money, you don't have any assets, you are done, you're broke. So now, if you're broke, what happens? Market falls. That's because the liquidity on this range is finished. Yeah. All right, price will move in the next direction, which is probably the higher time frame having this. All right. Now, normally, when price is liquidating, it moves in a corrective form because it's actually clearing out liquidity. Now, even if there's a high momentum like this, let's say there's no liquidity anymore, and price falls in a very, very heavy volatility, these zones would still be used because what do we understand? Price would always return into premium or discount of the range. So these areas here, which would still appear to be Fibonacci area within the range. This is why they use the Fibonacci tool. All right. This will still appear to be significant levels within the range, which price will also move in, liquidating people. All right. It will also be used as liquidity before price comes back down. So this is how structure works. So I'm just giving a concept of how structure works. You see, this is just forming lower time frame structures on bigger structures, which are still formed on another bigger structure. So it's just a circle. Until this circle is broken, then you have a change in trend. You can see the focus is now different. All right, the aim is now different. The aim is no longer to sell, it's now to buy. And once the aim is different, the previous swing highs, which are strong highs, become liquidity. Understood? As the concept is understood, right? Hello?
Yes.
I think my network is lagging. Can you guys hear me?
Yes, we can hear you. Can hear you.
Were you guys hearing me before? Or
Yeah, we're hearing you.
okay? Because I was asking, nobody's replying. Let me know if the microphone has been disconnected or something. All right, so that is the structure. That is how the structure works. Now, back to this. We have to understand that when you're picking a POI, you cannot neglect structure. Okay, you cannot neglect structure. Always make sure you follow structure. Structure is very important. So in whatever you do, make sure you do not neglect the structure. Okay. Now let me do this. Let me see something. I had some right up here previously. You can clean them up. But then now back to what I'm saying about your POI and the inducement stuff. Now, why you're having problems with that is because of two things. There are two reasons why you're having problems with that. One, you're misunderstanding the structures on different time frames, and you intend to pick a structure low which is still significant, a structure which is not yet broken. You pick the low as inducement. So price will clear you out. Okay, price will stop you out because or price will leave you behind because that structure is still valid. That structure is still in use. You're picking the wrong structure. Now, let's say, for example, sorry, you have this range. Okay, this is a range which is being formed. Now, this was a lower high, a lower low, lower low, lower high, and a lower low. But then there would always be a supply or a demand zone. There will always be a supply or demand zone resting around this area. That doesn't mean there won't be one resting here as well. I've taught this before. For the old students or the guys who are here, what do we call the ones below the higher supply zones or a supply zone? What do we call a POI? Below or above another POI. What do we call these ones? Can you guys hear me?
I can hear you, can hear you.
So what do we call zones? POIs below a bigger POI. What do we call this? The POIs there. What do we call these POIs?
Actually, inducement.
Eh?
Inducement.
So what do we call minor POIs? If this is inducement, then define minor POIs for me. Because I've taught this thing in previous videos. We have POIs, we have minor POIs.
Actually call it an inducement because from
Then
this
it's wrong.
structure
You
where
are
you do
wrong.
the
You are very, very wrong. If you're calling this an inducement, you are very, that's not what I taught you. And you have, and I know you guys have seen me drawn multiple times. I've written things like minor POIs on my charts. True or false?
true.
So what do I call minor POIs? If you call this inducement, what do I call minor POIs?
So I'm just going by the structure I'm seeing here. That's just why
This structure
I
is
called
not
it an
broken.
inducement.
You don't call this an inducement of this. An inducement is created within the range. An inducement is an internal range. No, this is not an internal range. You don't call this, you don't neglect this and call this structure. How is this structure? You're seeing the structure being formed like this. Like this. Then you will not say this is not the high that broke it. This high broke this. Did this one not break this one? What do we call a strong high or a strong low? This guy clearly retraced into premium of this range and then broke structure. Is that not enough to call it a strong high? This is a strong high. But then unfortunately, there's a demand zone, sorry, there's a supply zone resting above it. What do? We call this a minor POI and pay attention to it. We don't trade from it, it's a minor POI. We pay attention and wait for the reaction. So once we see the reaction, we know what to do. If it's going to hold or will there be a stop point into this. Is when you see price coming into this POI with a low momentum. When there's a low momentum here, then you know that yes, there's every possibility that this might not hold. Then you have a focus here, and then you wait. Then you know that this is creating liquidity. And then you wait for something like this to happen. But then why would you just neglect this and just call this inducement because there's a demand zone, if there's a supply zone resting here? That's not what you do. When you do that, you're doing the wrong thing. These are very simple concepts, but can be very, very misunderstood. You can misunderstand this. You can easily misunderstand this thing. And whatever you'll be doing, if you'll be calling this, let's do it. Let's even go to the live chat. Let's go to the live chat. And how can you call that inducement? So let's say you were here. This is even a perfect example. You have this loop, and then you have this, you have this, you have this. Now this is a structure. This is a higher time frame structure. Now this goes to this point. This is not even broken yet. That we know. This is not broken. So this low is still a valid low. And then it expects it to go into this supply zone. And then this supply zone is strong enough to push this structure down to break this. Now price is returning into this. Now this is now a break of structure. And you know that this was liquidity because what did I tell you? I say if it comes into that POI and give you a low momentum, this is a low momentum. This momentum was still bearish. Now, you want to see something like this, what do? You pay attention to the lower POI, the one that is below it. Because there's a low momentum. That one is not as fast as it's supposed to be. That is the only time this is valid. How can you say this is not your POI just because this one is resting below this? This is still a low. This low is only invalid when it doesn't hold. Now, you see this, if this was the POI you picked, and you see low momentum from here, you would have still made money, knowing that this was your supply zone that could go against you. Now, if you know that this is a supply zone that could go against you, you don't trade from here, you also wait. You pay attention to what is above it, and then the reaction. Now, the reaction comes in to break the structure, and then you will say this is inducement. So you will not pay attention to what is happening here. Did this high here not break this low? and formed a new low. And then if you draw the premium and discount of this, what would you have? This. Is this not a supply zone and lower time frame? So why won't you pay attention to the reaction from this just because you see equal highs or equal lows here? That's very wrong. You will neglect structure. Instead, you keep getting left behind. And then you will now that was why I even wanted us to have this particular topic today. The one this is not even the main topic. This is the topic we are treating of a wrong answer. Who even answered that? Progress. Was it you?
But yeah.
It was you.
Yeah, it was me, it was me.
Ah, messed up. Anyways, so just take your corrections and go and watch the videos again. Whatever
Yes,
you
sir.
were doing before, it was wrong. Whatever it was, as long as you're calling that an inducement, it was wrong. Don't even tell me why you were doing it like that. Just go and change it. Go and watch the videos, mentorship group, and change it. And you know the funny thing, I'm not going to even edit this video. So the way it is like this, I'm going to just post it. So that everybody out there too who have been doing like this too, you know that it's just shame. Shame on them. Shame on everybody that been picking supply and demand zones like that and calling it inducement. Nobody taught you that. You're doing the wrong thing. All right, let's go to today's topic. Who had the first question? The other first question that we were treating about POIs and inducement. I believe this must have answered your question, Abi. At least this class should have given you a concept of that, right?
Yes, sir.
All right, so let's go into today's. All right, today's topic basically is why supply and demand zones can fail you. Reasons why supply and demand zones can fail you. Now, just like what we had earlier, the discussion we had earlier. Hope this is recording. Yep. What you understand is that supply and demand zones are areas which I've taught you guys. Basically, I've already taught you guys what supply and demand zones are, and I believe you already know what supply and demand zones is. So I won't just go into breaking that, but of course we have wasted a lot of time already. But I will tell you that supply and demand zones are also criteria you use to pick a POI, all right, or a zone. A POI is basically a point of interest, so it's still a zone. A supply and demand zone is kind of like a tool in economies which we use to pick a particular zone we want to pay interest to. It could be an investment zone. It could be as long as it's an area of interest. Now you can pick an area of interest using supply and demand. Supply and demand zone itself is an economical concept. It's a concept of buying and selling. When the demand is high, the supply is low. When the supply is high, the demand is low. It's more like up and down. We ask, you give us. We don't want, you sell. Something like that. That's just supply and demand. It's just buy and sell. You ask, I give. I buy, I give to you. You sell. When the price is high, that's what supply and demand is. Now, these areas which we pick, other blocks, these areas which we trade for, which we call supply and demand zones in the market, we have criteria as to what we pick them. Now, when you neglect the criteria and just jump into the market and just call this a demand zone or a supply zone, things like this can happen to you. And then that can stop you out for you to lose multiple money. You can lose and then do all sorts of things to yourself because you made mistakes. That's because these zones are not just picked by the candle view or the way the candle view. We don't just call this a demand zone because of this sell to buy candle. All right, there are criteria you use to them, which makes you pick them. Now, and once you neglect them, you can end up losing. One of the reasons are misunderstanding supply and demand areas, which I just explained for you now. But once you misunderstand them, it can lead to you picking the wrong zones, and then you can end up getting stopped out. So you have to understand basically what supply and demand zones are. Luckily, I'm working on the PDF file, which was a suggestion from one of you guys. I'm working on the video file now, and it will be out probably before weekend. I will summarize everything and I will send it to the general public. So everybody will have access to it. It will be on the free Telegram channel. So you guys can also go and look into it because clearly you guys also need to you guys need to know what supply and demand zones are, so that you can know what you call inducements too. Now, secondly, neglecting the market's intentions. Now, we understand that this is trading, all right? We are trading in markets, not the candles. So these things are moving for a reason. They don't just move like this. There are reasons why they are moving. Some of those reasons are fundamentals, sentimentals, and even economical reasons, news. They're basically fundamentals. Now, those reasons can push things like this to happen. And now, knowing that this is a supply zone, which you use candlestick to observe, but neglecting that there's a news coming up now and placing your entry here can cause things like this to happen to you. So you cannot just neglect other aspects of the market just because you're using candlesticks. Always make sure you have those that are in place and in line with your supply and demand zone. Your supply and demand zone is a confluence to picking a POI, not a confluence to telling the market what to do. All right, so you don't pick supply and demand zones to tell you what to do. You use them to pick a point of interest on your technical analysis. All right, don't neglect other aspects of trading because of a supply and demand zone. All right, you're seeing a supply zone that is right here, and you're having a bullish news coming out, and you're just going to pick the supply and demand zone and neglect the news. You can get stopped out. Okay, supply and demand zones are not stronger than the news or the market itself. Please. Now, relying only on the supply and demand zone when you want to trade can cause you big issues. Or it can cause you really, really big issues. Now, for example, supply and demand zones. You know them very fine. You know that mostly on technical analysis, they are formed in forms of range like this, right? These are supply areas. Now, because you know them doesn't mean that if there's a zone created here, right, and price drops to this point, and there is a zone created here, it doesn't mean that price would respect this zone to take it back up completely, knowing that this is a weak low. And you neglecting the fact that this is a weak low or refusing to understand the concept of a weak low just because you know supply and demand and wanting to trade with supply and demand can lead to things like this. Because this low is weak and the structure is bearish. All right, so you need to understand structure, this concept, and also know which areas you pick your zones. Okay? Okay, so you need to understand the areas, you pick those zones. Now, if you're having a supply zone, you call it a supply zone because it's within which area of the market? Who can tell me? Let me ask this question. If you are picking a range, if you're trading a range, we call this area a supply and this area a demand because before I hear answer, I don't understand. Let me just answer it myself. We call this area a supply.
Is because as a premium zone.
Thank you. Premium and discount. You call this zone a supply because it's within premium, and you call this a demand because it's within discount. So if you see a range here, and then there's a range here at the 50%, and you're calling this a supply zone, neglecting this, you can get stopped out. So clearly, you have to understand that you don't just use supply and demand to trade. You also need to understand some other concepts which can also help you to pick a supply or a demand zone. Do you understand? So do not neglect other sectors of analysis just because you know supply and demand. And then we have old supply and demand zones. Old supply and demand zones. Now, you have to understand that the older the zones, the weaker they get. All right? If you have a supply zone resting here within the lower time frame, all right, and you see this is on the daily, and price has moved this far to breaking that structure, but did not return into this and went lower and even did a lot of structure before it get back here. You have to understand that there's every tendency that the demand zone here is going to be stronger than this if the structure is bullish, because one, this zone will be weak because it's been a long time it has been created. It has been open, too obvious. When you say a zone is too obvious, it's because it has been open for a very long time. You see, if it takes too long to get to the zone, you see there's a zone here, and price, you know, let's say this is on the 4-hour time frame. That doesn't mean it's that good, but let's say on the daily, and you see price has done this, done this for months and hasn't gotten to this zone. There's every tendency that you could see a stop point to this zone because it's old. All right, it's weaker. It's not as strong. It might not be strong enough to bounce such momentum back up immediately. But you see that zones who get mitigated earlier give cleaner reactions than older zones. This is 100% true. You can check them yourself. The older the zones, the weaker they get. Okay, it's likely is going to be liquidity. But that doesn't mean 100%. This is a criteria you should use and neglect all and just pick newer zones only. You can still get stopped out. You can see that happened here. Okay, and then we have overlapping zones. All right, we have overlapping zones. These are zones that fall into a counter structure. All right, now this is a zone. This is a supply zone, but it happens that this supply zone fell into a bullish structure. Price will break this supply because the structure is not bullish. Structure is always higher than, a supply or demand zone. All right. So overlapping zones too. When you see a structure that is a supply or demand zone at 50% or at a counter zone, is always wise to observe first before you take a trade and neglecting time frames and advantages. A Fibonacci to picking a supply zone is an advantage. Multiple time frame analysis and seeing a single supply zone on multiple time frames is an advantage. All right. You don't neglect things like that just because they are not there. Right? If you don't see them on multiple time frames, it's a weak zone and it's likely going to fail you. If you don't see them on the Fibonacci areas, if it's not in line with any Fibonacci zone being drawn on multiple structures, it's likely going to be a failed supply or demand zone. It's a fake zone. All right. So don't neglect your advantages. You have structures, sections, and multiple advantages you can add to your supply and demand zone. Don't just neglect them because you see a clear order block. Okay, this can lead to failed zones and losing of money and confusions. Okay, so these are some of the reasons why your supply and demand zones are not working. And if you put this into considerations, you can end up fixing your problems. Okay, so that is all on that. Anyone have any question concerning what we have been doing? We have like 1 minute left. So anyone has any questions? So we'll know if we'll continue in the next section or if we're ending it here. Do you guys understand? You can watch the video again, over and over again. All right? You can watch the video over and over again to get this concept. It's a very simple study, but we'll be very fast, so you can watch it over and over again. All right, I'm going to post this to the public. So everyone who is watching, thank you for joining us today. This is just an average study section with the team. And this is how we study. I used to shout at people too if you get confused. So you're welcome to join us. Or you can join the free community on the Telegram channel. Okay. Thank you for joining us. Bye-bye. For those of you who have questions, you can ask in the community. Well, this live stream will end any minute from now. So you can ask in the community and I will attend to all of them after watching the videos if you're confused. Okay?
Okay. Thank you.
All right. Good night, everyone.
My boss.